So it's almost that time, guys. We're about 3 hours away from the Fed's decision. Are we going to get a rate cut? What's going to happen? We're about 3 hours away from that. So we have to go over my thoughts there and three companies that just reported earnings. We're going to break down the numbers, the charts, and we'll break down the indexes as well, which, by the way, now every index in the U.S. stock market is in the green. So, guys, jam-packed video. Take a sip of your coffee. Hit that like button. You might as well subscribe as well. And let's dive into it. So, right now, like I said, every index is up as we're about 3 hours away from getting the interest rate decision from the Fed, which right now the Fed funds rate is sitting at 4.5%. And, well, it's projected to stay the same. In other words, we're not getting a rate hike, obviously, and we're not getting a cut this go around, or at least that's what people are projecting. We're not getting a cut, which I personally agree with. I don't think we should cut rates yet. I think if the economy weakens even more over the next couple of months, yes, maybe we should cut rates, but I don't think we should do it yet, even though we got a negative advanced GDP number. A lot of that was because of these companies buying up a bunch of inventory right now, kind of getting ahead of the tariffs. That kind of nuked the GDP number, kind of, in a way there. So I'm not taking that. I'm taking that number a little bit with a grain of salt. So I don't think the Fed's going to cut rates just based on that. But if it gets worse over the coming months, if the data shows that the economy's getting worse, okay, yes, then the Fed will cut rates. But I don't think they're going to do it this go around. The Fed funds rate will most likely stay at 4.5%. And it's very important to pay attention to the sentiment from Jerome Powell during the press conference when he gets asked, because you know he's going to get asked, when he gets asked, when will the Fed cut rates? How does he respond to that? What's the sentiment around his response? These are things that move the stock market, guys, and these are things that we need to pay attention to today. So let's talk about the markets a bit more. We have three companies to break down, all of which just reported earnings this morning, and now we have QQQ in the red. So stocks are actually slipping down. You can see the S&P here is falling pretty drastically in the last 10 minutes of trading. We're down about $2 on SPY. QQQ, which now is in the red, is down about, let's see, in the last 10 minutes, it's down a couple dollars. So clearly we're starting to sell off a little bit, heading into that Fed funds rate decision in about 3 hours. But obviously it's in 3 hours, so anything could happen between then or now and then, right? But yeah, that's a quick rundown on the Fed funds rate, kind of what to expect there. We're seeing some green, some red. Stocks are kind of teeter-tottering right now, awaiting the Fed's decision. So let's start off with Uber. Uber reported earnings this morning, and their stock is, well, down over 1.2%. And the stock closed at $85 yesterday, $85.90 to be exact. It shot up to about $89 when the numbers came out. Then we dumped all the way down to $79. So a big drop there initially, about $10 from 89 to 79, about 11% of a drop there. Then it recovered a bit. We opened up at about $83, and now we're actually gaining back a good amount of those losses, only down 1.3% on the day today today for Uber. Not too bad. So let's see what Uber ended up reporting. They did EPS of 83 cents, which crushed the 50 cents expected. Wow, very big beat there, but revenue missed. Oof, 11.53 versus 11.62 billion. So they beat revenue. They beat EPS, missed revenue, and let's see, anything on guidance, any other metrics? worth mentioning. Oh, yeah, there's a lot of them here. So Q1 monthly active platform consumers up 14%. Wow, that's pretty good. Quickly grown to an annual run rate of 1.5 million mobility and delivery AV trips on Uber's network. Okay. Gross bookings, $42.82 billion in Q1. Pretty insane. Again, Q1 revenue was $11.53 billion. Delivery trip growth grew to 15% year over year. Do they give us the metric of the average trip price? That'd be an interesting one worth looking at. You know, how much was the average trip in Q1 across all the different trips that or the Uber rides? That'd be an interesting metric. I don't even know if they give that metric, but overall earnings not bad, not great. I mean, the miss on revenue is pretty bad, but the stock is kind of shaking it off, right? We're only down 1%, recovering a lot of the losses. Pretty good initial sign here for Uber after a miss on revenue. And the chart, I mean, guys, the chart looks great still. You know, we broke out of $82 a couple of days ago, earlier in May. We took out the highs from the middle of February with that breakout above 82. So that was a great sign. We filled the gap all the way to 85, 86 after, you know, was that after earnings or no? That might have been before earnings. Either way, we filled the gap to 85, 86. Now we're pulling back. We already pulled down to 78, 79, 80. We retested that old resistance as support. Now we're starting to run again. This looks good on the charts, guys. Looks like Uber is trying to fill this gap to 86 again. Maybe it breaks that. Who knows? Time will tell. So keep your eyes on Uber. Disney. Oh, my God. Guys, Disney stock is up 10% today. Am I dreaming? What's going on here? I cannot remember the last time Disney stock was up 10% in a day. You know, honestly, I can't even remember the last time it was up 10% in a month. You know, in a year at this point. You know, Disney stock has not been good for years, right? And obviously, there's been a stretch. There have been stretches where the stock has gone up a lot. But if you're looking at where it was 10 years ago, well, we're not much higher today compared to where we were 10 years ago. Not ideal. But either way, Disney reported earnings today, sending the stock up 10%. It's got to be good. So let's see. Adjusted earnings per share came in at $1.45 versus $1.20 expected, so that beat. Revenue also beat, 23.62 versus 23.14 billion, so double beat for Disney. And let's see. I want to get some more numbers here, guys. Let's get the breakdown. So it looks like here Q2 domestic parks and experiences operating income grew 13% to $1.8 billion. Walt Disney Q2 sports revenue $4.53 billion. We're kind of going all over the place here, guys, but bear with me. Q2 Disney Plus paid subscribers 126 million. Let's see. They see 6 to 8% segment operating income growth for experiences for full year 2025. Not bad. Disney sees modest increase in Disney Plus subscribers in Q3 versus Q2. Interesting. Looks like here Q2 cash provided by operations, $6.75 billion. Experiences revenue, I might have already said this, but I'll say it again, $8.89 billion. How much were the overall, let's see, anything else? Disney Cruise sees Disney Cruise Line pre-op opening expense of about $200 billion or million, not $200 billion, $200 million for full year 25. But man, not bad overall. They expect fiscal 25 adjusted EPS of $5.75 versus $5.43. So very good guidance there for adjusted earnings per share for the full year. So double beat, good guidance, strong Disney Plus numbers. So yeah, man, the stock, which was down a lot, is running on this news. And it's probably because earnings were way better than expected and the stock was so beaten up. It makes sense. I mean, it went down from 115 early March all the way down to $80 by early April. It went down 30%. And slowly it's been climbing up the last couple of weeks, and now it's really breaking out. 10% move back over $100. We're back over these moving averages. So Disney, definitely keep your eyes on it. Keep your eyes on the momentum. This is one that I don't own anymore. I used to own it for a couple years, made a small amount of money on it. That's the thing, it was flat for a while. I kept holding on to it, thinking it's going to turn around, it's going to turn around, it's going to turn around. And then I just threw the towel in. I had enough like 2 years ago. And funny enough, it hasn't done much in the last 2 years. So I sold at a good time. I mean, this is the 3-year chart. I mean, I sold probably in here somewhere in 2023. But either way, whatever. That's Disney, DIS. And the last one here, guys, by the way, hit the like button. Make sure to subscribe if you guys stuck till the end. I appreciate you all for all the support. Make sure to subscribe. Hit that like button. NVO is the last one that we're going to talk about today. Novo Nordisk, which this stock has been down for a while, man, and it's been a while. I think it hit it hit $143, $148 a share back in about a year ago. Yeah, back in June 2024. Now it's down to $67. It's down 55%. So NVO, Novo Nordisk, they reported earnings this morning, right? And their stock's up over 2%. Not bad. Let's see what they did, though. I'm not seeing it. Where are we? Oh, here we are. EPS, 92 cents. That beat the 90 cents expected. Sales missed, though. Wow, by a big amount. 10.89 billion versus 11.64 billion expected. So beat EPS, missed on sales. Let's see, anything else here? Outlook lowered. Oh man, 2025 outlook lowered. And and didn't they yeah, Novo Nordisk, Wegovy sales surge 85%. Yeah, they're involved in these weight loss drugs, right? Which we're seeing those everywhere now. They're literally everywhere. So much competition, cheap there's cheap options. They got, the brand name, quote unquote, right? We're not going to get too deep into that in this video, but clearly that is probably why the stock's hurting, because of all the competition now, all these other companies with competing drugs, right? But hey, we'll see how it goes over time for NVO. It's still up a lot over the last couple of years. I mean, if you look at the max chart on NVO, come on. I mean, this stock was at $50 in 2022. It got all the way to 150. And look at where it was in 2020, $26 a share. It's still up 2-3x from that point in 5 years. So, yeah, I mean, NVO, it's struggling in the short term, but when in doubt, zoom out. So, with that being said, I'm going to wrap up the video. Let me know your thoughts in the comments. Hit the like button. Make sure to subscribe. Join the free email stock newsletter where I send out my top stocks weekly for free. That is down below. And check out the Patreon as well. Also linked down below if you want to keep up with what I'm doing in my portfolio every single week. That's on Patreon. And with that being said, cheers. I'll catch you in the next video.